I welcome Verena Ross, the chair of ESMA. And Verena, we've had many conversations in the course of today about issues that I think we're going to touch on, but the importance of particularly securities regulators was mentioned by many, and that you're at the forefront of some of these technological developments because the entities you regulate are often at the forefront of adopting new technologies. Thank you very much indeed for being with us.
Thank you very much, Nickolas, and very happy to be here.
I think maybe to start with, could I ask you to maybe set out some of the priorities of ESMA in the digital space? I know you've got multiple priorities across the policy areas. I don't quite know how you do it, but if you're just limited to the digital area, what are your current kind of hot topics, so to speak, of?
Thanks very much. So I think maybe let me start just with a very brief look at the wider developments where digital is really changing how the financial markets work. And I think we see that both in terms of FinTechs entering in providing specialized services, and I'm sure many of your speakers today have talked about that. We've also seen traditional financial firms increasingly using and relying on third-party provider services for making the digital transition within their companies. And we've seen, very importantly, I think, to my mind, the acceleration of investors using digital technology to engage with financial services. And I think that was particularly driven through the pandemic, but we've really seen that also continuing with the engagement in social media, trying to find information on how to invest. And all of that brings lots of benefits. It can make it easier for the engagement. It makes the operations more efficient, but it clearly also provides certain risks around investor protection and also the operational risks. And in that context, I suppose, in terms of our priorities, I would very much, first of all, focus on the investor protection side of things. How do investors engage with technology, and where can digitalization actually help to make sure that investors are better protected, but also that they can engage with the financial services? And so in that context, we've provided a number of pieces of advice to the Commission. There has been obviously the retail investment strategy published by the Commission in May last year. But we've also just issued, and I just wanted to mention that, a discussion paper on the whole question of how does technology and digital engagement help or hinder the engagement of investors with financial services. And we would be very keen to hear from stakeholders. We are planning to do a survey as well, directed at retail investors, to get their experience of online investing through apps and websites, and how that might influence our regulatory stance and supervisory stance going forward. In terms of the general priorities you asked about, obviously DORA is an important one, MiCA is another one. We have the DLT pilot as well, but I don't know whether you want me to go into each of those in a bit more detail, or I can happily talk about many of them for quite some time. But just from the interest of your audience, do you want me to say a few words about DORA maybe?
Yeah, maybe say a few words about DORA, given that there's so much attention around it. And then I wouldn't mind coming to MiCA, because there was a lot of a discussion on MiCA already. Yeah. And the whole afternoon will be very focused on stablecoins and MiCA.
Okay. No, so DORA, Digital Operational Resilience Act, is obviously a key piece of regulation, which we as ESMA, together with the other two ESAs, are trying to implement at the moment. And it's really focused on how can we create better operational resilience in the financial system in light of the digitalization and the risks that that brings. And I would distinguish two parts of our priorities. On the one hand, it's the significant policy work, where we are preparing together with the other ESAs a number of important parts of the more detailed regulatory regime around IT risk management, around other things. And then on the other hand, it's the oversight framework. So that is, and maybe Jose Manuel has already talked about that earlier, it's about making sure that we actually have an oversight framework for the most critical third-party service providers that are providing key IT infrastructure and digital services to the EU financial services sector. And then the last part, which is part of that more operational part, is the key tasks to set up IT tools to collect important information, including on potential major ICT-related incidents and significant threats. And that, again, is across ESA, EU hub for incident reporting, where we are trying to, first of all, do a feasibility study of how to bring that about, and then we will see what that leads to in terms of further operational requirements on the ground for us as ESA to be able to collect that data.
Thank you, Verena. Yeah, we will actually have a panel which I cross who coordinates this work for the three ESAs a bit later to see what are the next steps. But one thing I would say is the work of the three ESAs on DORA has been, for me, quite remarkable, given that you are three authorities representing, I don't know how many competent authorities in your respective supervisory boards and all the experts behind it. It's been quite a miracle how we've been able to produce very high quality documents. And actually also it's a process where I think these collectively have been particularly good in listening to industry views. We've seen a lot of constructive changes being introduced. And I sometimes jokingly say, this is a model for any other consultations that any of the ESAs conduct as to the level of feedback that we see integrated into the text. But that's, each issue has its own nature. Maybe to Mika, we're going into the implementation. There's a lot of questions still outstanding, practical questions resulting from individual competent authorities having some discretion here and there on transitional arrangements, on how to apply, let's say, when and how to apply the licensing requirements. I'd be interested to hear a little bit how you see the process at the moment on the implementation of MiCA, including, of course, also level 2 measures, but also to the extent that you see, certain challenges still there and the role ESMA can play in bringing some convergence into that licensing experience that we're now going into.
Yeah, no, thanks, Nick. I think it's clear that we are really entering a new ground here. And I think that's a challenge for all of us. And again, MiCA also concerns the EBA to some degree, but what we are looking at ESMA is really the crypto asset service provider space. How do we make sure that we have both the right regulatory framework in place, and also how do we make the authorization, supervision, and enforcement, which will be done at national level, work effectively and create a common supervisory framework in Europe that is coherent and that makes sure that we have a level playing field. I think looking first of all at the level 2 mandates, we have we have over 30 mandates under MiCA to provide either level 2 or level 3 guidance. And that is a massive amount of work, which also really puts a big challenge on us to try to not only get the right input from market participants and key stakeholders. We've seen enormous responses to our consultations, including from some individuals, which is rather rare, but I think also quite important in this space. And we're really learning a lot also by that outreach through the consultation process. In terms of, and we've already delivered on some of the technical standards and so on, but it is something where we are also drawing a lot on the expertise that exists in some of the national competent authorities already, because you have people which had national regimes in place on crypto assets, and clearly we're also trying to learn from their experience. And that kind of convergence activity we are doing is really essential here to make sure that we have ultimately a MiCA rulebook that protects the investors and that is effectively applied across the whole of the European Union. And for that, we're focusing, not surprisingly, first of all, on the authorization process. because that's the first entry point into the regime. And there, as you rightly say, there are also some additional challenges we are facing because of this introduction of grandfathering provisions and transitional deadlines in the legislation, which means that in some countries, the national authority doesn't even know yet whether they are the dedicated authority for this piece of work or not. And we are also not sure when in different countries the new regime will actually be started and how far these players who are under the new regime will have to compete, at least for a period of time, with players who have come in under a lighter regime, mainly the national transposition of the anti-money laundering directive. So that is for us a real challenge. We've written to member states. We've been very public about the fact that it's very important that the national authorities get the support from their national legislators as soon as possible, that we limit the transition period to ensure there is not this extended unlevel playing field, which also will cause a lot of confusion to investors. You know, what is this? MiCA is there, but I'm still kind of under a regime nationally which might not offer me the same protections. So I think from that perspective, it's very important that we continue this convergence work, and also the discussions between the individual national supervisors about their engagement with particular crypto firms that might be not just approaching them, but also approaching other national supervisors in the EU, and where we just need to make sure that we are really speaking with one voice as much as possible.
I think you make a very good point, Verena. You always make a good point, but I think that's an interesting one because we are seeing this in licensing applications where it's unsure where companies should apply for licenses or where they might consider to apply for multiple licenses because of that potential temporary arbitrage. I think it's only a temporary one, or let's say temporary uncertainty between different regimes being applied. I also saw yesterday you issued interesting guidance or advice. I'm not quite sure what the legal instrument was because I was preparing for the conference, but on reverse solicitation. And maybe you might want to say a word about that, because I think particularly in the MiCA context, that's quite interesting, because the industry, a lot of the industry has so far pre-MiCA relied on principles of reverse solicitation.
Yeah. No, we actually issued two guidelines yesterday.
Cool. Yes, you're
One
right.
on reverse solicitation, as you rightly say, and the other one, also quite important from a legal perspective, on the definition of financial instrument between MiFID II and in the MiCA context. And of course, this is something which, again, because MiFID is a directive, this is implemented differently in different national legal regimes. But nonetheless, we try to provide in the guidelines some clarity as to where that boundary lies and what considerations national competent authorities and market players should give to as to whether their particular asset or instrument falls on what side of that boundary. So we've issued that on the reverse solicitation, and that is probably the more interesting one in a way for many people. It is really trying to say very firmly that while there is always this issue of reverse solicitation, so if I, just to explain what it is, if I as a client actively approach a player who is not authorized in the EU but is situated somewhere else in the world, if I do that directly and I say I want to buy this particular asset or whatever it is and open an account with you, then that firm is allowed to deal with me because it is basically my initiative that started this process. However, that construct needs to be very clearly prescribed and narrowly interpreted to not open the floodgates completely to any third country firm who can freely market, sell, and approach retail investors in the EU, because otherwise we completely undermine our investor protection regime and also create a completely unlevel playing field for the players who are actually situated in the EU and are properly licensed under MiCA. So from that perspective, we issued some guidelines to try to explain how this narrow interpretation will actually in practice work, And this is for consultation at the moment, so we are also very interested to hear feedback on the consultation on these guidelines. But for us, this is a key part of the overall MiCA regime working in the global financial market and world that is out there for crypto assets.
Thank you. And you're right, the other one is important because we will actually have a designated session on this later, where MiCA ends and securities markets regulation begins, or where we're seeing securities institutions or fund managers moving into the crypto market and trying to shape it as an asset class. But maybe I move on a bit to artificial intelligence. And we had a panel just now on artificial intelligence. I'd be interested from a ESMA, from a securities markets perspective, what trends you see in the use of artificial intelligence, and what you see as potential risks and let's say areas of potential future policy intervention in this area.
So I only unfortunately caught a very last bit of the panel discussion, but it was very good to understand also, and reassuring how also the various people in the panel talked about it, because I think for me, we see some use cases that are more mainstream, that involve some of the natural language processing possibilities, while other use cases are more specific and remain more niche in a way. And what we see so far, however, at least from what we have looked at the moment, is that overwhelmingly AI is used with a human somewhere in the loop, so to speak. So we have no or very limited kind of real experience of no autonomous role in the core activities. So I think when you talk about the advanced and more niche usage, it's mainly from what we've seen in quant funds, where some of this is used for portfolio optimization and technical analysis, while the more mainstream one is clearly more in the general analysis, research, ESG assessments, reporting, those kind of things. In terms of overall outlook, there's clearly potential for vast expansion from what we can see. But at the same time, it's, I think, still a bit of a question how this will really push forward in reality and how many real use cases there will be for particularly the more advanced parts of this. I think in terms of benefits and risks, I certainly see benefits in terms of efficiency, dealing with the large amounts of information and data that we now have in the market and making good use of that, but also a key number of risks around explainability, concentration of the systems and the big players in here, interconnectedness, and potentially even systemic risk if you see, everyone working off the same artificial intelligence drivers. Operational risk, obviously, and also the whole issue of data quality, data privacy. Maybe just a final word in terms of also thinking about how this actually applies also to us as supervisors. And I think it was mentioned earlier briefly, but we have also started two quite exciting projects with the national competent authorities to look at how can we as supervisors use this technology more in our day-to-day work. One is, and I think that was mentioned, the using of AI to help monitor market abuse. So large volume of data, both structured and unstructured, and can we use AI to make our job easier as supervisors of that data? And the other one is developing natural language processing tools to scan public disclosure documents. In particular, an example is for investment funds related to sustainability information, for example. So those are the kind of things we also think about as terms of supervisors. How can we actually make use of this technology, always conscious of the risks and opportunities it brings?
No, and I think I totally agree with you, and I'm not asking you to respond to it. I think it's interesting. As it was, I think, in the very first conference we did, and Stephen Major was speaking, and I said, look, ESMA is at the forefront of artificial intelligence because you have to deal with algorithmic trading, for example. And MiFIR was, in a way, the first technology-neutral piece of legislation. And we also are seeing things like robo-advice emerging and the distribution of funds and financial instruments. And be interesting to, at some stage, maybe talk about that, because what we're now also seeing is tailored marketing increasingly. When then is that compatible with all your PRIPS requirements and value for money and all those interesting things we're spending a lot of time on at the moment in the retail investment strategy. But very interesting. I don't know whether you want to respond to any of those, but otherwise I would move on to tokenization in a moment.
I think I would just respond that, for me, indeed, in the securities markets, in a way, we've seen technology already play a bigger and bigger part in how trading is happening on the ground, how players are interacting amongst each other, because so much of it is about driving the last bit of efficiency out of timing and settlement and everything else. So I think it's something that will remain at the forefront of what we do. And with that, we, as you say, had to think quite carefully from the beginning. How can we make sure that when we look at different types of engagement, whether that's more traditional or whether that's more in the innovations digital space, how can we make sure that our regulation actually responds also to the newer developments in an appropriate way? And for that, one of the things that I think is absolutely essential is just agility of the regulatory framework, being able to adjust and make sure that we can actually follow market developments. It's always hard as a regulator to be ahead of the market developments to make sure, but at least can we make sure that when we do have a regulatory regime, that it stays sufficiently flexible and agile.
Yeah, and I think you make a good point. I mean, it's one of the reasons why we always support the creation of ESMA and the other ESAs to give you that supervisory power to coordinate and take actions in many ways before we need level 1 legislative changes. And we see it in those guidelines you've just referred to in MiCA. I know they were prescribed by MiCA, but nothing would have stopped you to do something similar if you wanted to as ESMA.
Exactly.
You just talked about squeezing the last bit of efficiency out of markets, which I like as a term. And it brings me to the question of tokenization as a final subject. And we've got a whole panel on that this afternoon. And it might be interesting. We could have had a whole afternoon on that, given how much interest there was by people to speak about it. What do you see as the potential over the next few years of tokenized securities as part of the, let's say, delivery from trading to post-trading?
Yeah, it's one of these questions that, I think we've asked ourselves already for a couple of years in a way. And what I find interesting is that in a way it hasn't yet penetrated more broadly into the financial services sector. So we've seen small experiments in different parts of the financial sector and the trading landscape. But in the end, tokenization at the moment remains still quite marginal in size. And certainly from the data that I was just looking at the other day, again, publicly traded tokenized bonds have really a very small outstanding notional. And that has also not, it is increasing, but it's not, exploding. So one of the things that I think I find surprising there is that there are clear theoretical benefits from efficiency gains in the issuance, in the distribution, in the management of securities through greater automation and disintermediation. And yes, there are some challenges, but why this has not yet scaled really as an underlying technology, I think is something that I find surprising. What we hope to see is from the DLT pilot regime that is now in place, we hope to also learn how this is working on the ground in some of these examples for trading and settlement, where we are the regime now being in place since March last year. We've seen 4 official applications to national competent authorities, and there are several more in the pipeline. And I think one of the things that I'm really looking forward is to see what this will bring, see on the ground how this innovative solutions for cash settlement will evolve going forward, and then see whether we can see more of this tokenization and the DLT technology taking hold in the future. But as I said, at the moment, it doesn't seem to yet have hit the ground running, so to speak.
I mean, could that be? I'm just throwing it out. But I always try and explain through 3 reasons, because we see much more of its uptake in Asia, for example, than we see in Europe and in the US. And that's partially because we don't have the same, in our case, the same established infrastructure, which is working actually quite well. And you've got the debate at the moment about moving from T+2 to T+1. And some say, oh, why don't we go to T+0? But it's partially because the infrastructure is working quite well. So what problem are we, how much more do we want to squeeze out of the system, so to speak? The second one, I think, is that you've got a collective action problem. 2 or 3 people doing it doesn't help. You need to move the whole market. And that's physically, I think, quite hard. And the third one is, I'm not sure yet, not maybe you, but many supervisors might not yet be fully convinced of the technology. In a stressed situation, it might be good day to day, but if we've got events as we saw after COVID, or when the Ukraine conflict started, or during the banking crisis, is it robust enough? It might be, but we don't know. But maybe I finish on that. And I mean, you have this discussion around T+2 to T+1. Where do you see that going? It's also part of the technology debate, because I'm not saying put you on the spot, but some would say, why do we waste time going to T+1? The Americans are doing it. Why not go to T+0 or T plus end of day? Why not make a bigger step if we make that investment anyway?
No, and that is exactly the question that we decided to put into our consultation and discussion paper, because we felt that at least that question needed to be asked, and we would be very interested to hear. I have to say the feedback I'm getting so far is that I'm hearing on the ground is more, moving to T+1 is already quite a challenge in Europe, given the setup in Europe, the framework that exists, and looking across the different asset classes and how they work together. And I think we will also have a good first exercise of seeing how that impacts the market by the US moving in that direction, because obviously many of the players in Europe are exposed to that in any case. So it will be interesting to see how that plays out. But certainly we were keen to not exclude the discussion about should we go even further than T+1. At the same time, I think we also need to be realistic, and we need to see what is feasible at this point in time, and practically also what the relevant cost benefit of different options are. So this is not an easy subject. We are just looking at the consultation responses that we've had, and we will then pull together a piece of advice for the Commission, who are obviously also actively thinking about this. And we have both had workshops and discussions on an ongoing basis with market experts from all sides. But it is a significant market infrastructure shift, which, to my mind, we need to seriously think about. We can't just sit here and say it's all hunky-dory. We need to look at how can we move and continue to move forward. Technology is enabling us to do that. So let's definitely look at certainly T+1, and I will be very interested to see what the consultation brings back on maybe even going further.
Thank you very much indeed, Verena, as always. My last comment on that one would be, I think a lot will also depend what happens on the wholesale side of the digital euro, not just the retail side, but to deal with the cash leg of the transaction. So I think it'll be an interesting issue for the next few years. Thank you so much for being with us, taking the time out. I know it's a busy schedule for you, so very much value this. And I look forward to continuing the dialogue with you and your team. Thank you very much indeed, Verena.
Thank you very much. Bye-bye.
Thank you.